Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm going to talk about Tesla stock because I'm trying to find a sort of a fair price for Tesla. I know that it is difficult, but we saw this huge volatility over the last few days. So it is kind of obvious to ask ourselves, what is the fair price of Tesla? What is a reasonable price to jump in? This is what I'm going to do in this video. I'm going to try to do in this video. And so the only thing I ask you as always is to leave me a like, which is very helpful for me, for the video and the channel itself. It doesn't cost you anything. Thank you if you do it. And subscribe to the channel. Let's begin. Alright guys, so quickly before we start, this is not the typical let's say low quality Tesla video, okay? That some guys, they just do it. Someone that just scream and shout about incredible stuff going on, the stock price going to $2,000 by tomorrow and blah blah blah. No, this is not what I do. It should be in my best interest, okay, to do that because that brings views. So from my point of view, I will make more money, but I don't like to do that. And this is because people get hurt when these kind of incredible stuff are said, okay? Because look at that. Look at that. We had in just 5 days a drop of a 34.48%, okay? Now, there are a lot of people that they just bought the stock over there. I know that for sure. And probably because they were impressed about something that didn't realize that the price was clearly too high. This video is going to be, as always, an analysis based on real numbers. So trying to understand a value of a company, of a wonderful company, which is very difficult to value. As I showed you already in the quite old video, I tried to do the discounted free cash flow for Tesla. Now that is very difficult because the profit margins for Tesla, as you all know, they still have to reach a complete profitability. Okay, now they are reaching it. When you have negative margins for the entire history of the company, it's very difficult to do that kind of model. In this case, I'm gonna try a more speculative valuation, which I don't do them very often, especially in this very period. And it is a valuation based on the price to earning ratio, so the PE ratio. I don't do them very often because, for example, in this period, especially with the pandemic and stuff, we have incredible PE ratios, okay, which are very high. Anyway, this model gives a logic behind the price of Tesla. And let's see what it is about. Now, first of all, we start from the Q2 update. And this model tries to, is a simple model with the number of vehicles used and trying to find what is the earnings per share, and then with a PE ratio trying to estimate the price. Okay, so that's what it is. Now, the first thing to notice, as every one of you just already know because you are super informed about Tesla, is that Tesla makes 87% of their revenues from the automotive. The rest is about 13% is from other stuff. So the battery, the energy, insurance, and all these kind of things. Now, I perfectly know that, but I'm gonna use just the automotive revenues because it is the easiest one. It's not very easy. It's super difficult to try to understand the revenues they are coming from the other businesses. Okay, super volatile, you never know it, but is not finished here because usually the automotive industry has a PE ratio which is below 10, okay, so very low PE ratio. But I'm gonna consider Tesla as a tech company, so with PE ratios going from 35 to 50, so very high PE ratio. Now in that case, it's included also the other sides of the business for Tesla. So the other things like insurance, energy, and all these kind of things, because it's not easy to tell how much they're gonna be, but if you include a high P ratio, it makes sense to the whole analysis. Okay, so let's see what we get. Now, to understand this, basically we just go there when we have the estimated and the current numbers of vehicles. Okay, so the capacity of each factory. And this is very important. The analysis is made on 4 years from now. Okay, like as always, when I do the discounted free cash flow, I arrive until 2024 because longer than this, it's impossible. Okay, it's already difficult like that, but longer is even more. I'm gonna try to estimate how many vehicles Tesla is gonna make by 2024, and then trying to figure it out, the final earnings per share and then the price. Okay, so we start with the Fremont, which is already operative, and they said that they are going from 400,000 to 500,000 units per year. Then we have the Shanghai, which according to documents, it has a capacity of 250,000 units per year. And then the Berlin, okay, this is in construction, but they are saying that it's gonna make another 500,000 units per year. I reported all of them here, okay? Capacity by 2024. And we have the Fremont, 500,000, Shanghai, 250,000, Berlin, 500,000, and then we have the new US factories. Here is a sort of a scenario analysis. I'm gonna say, well, usually for Fremont, which is already in the US, and Berlin, they made 500,000. Okay, so probably they're gonna do something similar. Maybe it's more than one. I don't know. This time I said 650,000 units per year. That gives us a total amount of vehicles of 1,900,000. Okay, by 2024. Now, what we need is the price per vehicle. Obviously, it's an average. It was 53, 52, some says 51, 50. I want to be a little bit more careful and say 48. Why is that? Because Tesla, they have two choices, okay, in the future. Become a niche, like Ferrari, Lamborghini, etc. But I don't think they're gonna go in that way. Or they're gonna go with the volumes, and that's the most likely scenario considering the amount of gigafactories that they are trying to build. Okay, so volumes. And when you do volumes, you win if you put the prices down and you offer a great product. So if you see all the cars out there like Ford, Toyota and stuff like that, they are fighting to keep the prices down. That's why I put 48,000, because I think that Tesla overall, if they build more vehicles, they're gonna push a little bit the price down, okay, to be more affordable, to expand the market share. 48,000, it's reasonable, I think. Multiplying this by the total amount of vehicles, it gives us a total revenue, which is $91.2 billion by 2024. Now, to make you understand how big that number is, this is the revenues from 2016 to, these are estimates, okay, 2024. There is a jump of 4 years here. And we can see that overall we start with 7 billion, arriving until 2019, 24.578 billions, and then the estimates for 2020, $29.75 billion, and then this model gives us a $91.2 billion by 2024. Now, this is a 3x in 4 years, okay? It's huge. 75% per year. It's a very high number, very high growth. So this model, that's why it's speculative. Tesla, you know what? They are doing great, so it can be reasonable to expect something like that. It will be huge, but it will be great. So let's see what we get with this valuation. Now let's come back to where we was, and we can see that the gross margin. Now, this is another important thing. The gross margin, which Elon Musk said he's targeting 30%. I put 26.5%. We can put 27, someone can say 26. We can see that overall it has been increasing. Now we have this pandemic stuff, so anyway, it remains almost the same. I could say that it is reasonable to expect in 4 years' time at 26.5. Okay, so it continues to grow with more vehicles. They will have expenses, probably new models and stuff like that. Anyway, so when we take this percentage of this, we have that the gross profit is $24.168 billion for Tesla. Now we have R&D plus SG&A expenses. Okay, so research and development. We know that Tesla is a very great company for research. Okay, they are trying to do the innovation. They are trying to drive the innovation. So it's a very important part, this. Now, usually it used to be higher than this, okay, when the company was a smaller company. But right now, I'm going to say 14%. Okay, if you search this on Google and you see the graph, they are going down while the company is becoming bigger. 14%. 14% of what? Of revenues. So you take the 14% of this, which is 12.77 billions. And then you deduct this from here, 24, and you get $11.4 billion as an operating income. Now we have taxes, which usually, now I don't know, this is going to be an interesting parameter over the last few months, okay, with the new US president. If this changes, then all the stock market changes. For now, I'm going to say 21% on average, okay. That gives us, at the end, a net income of $9 billion. Perfect. Now, we have the new shares outstanding, which are around 932 million shares after the split, and that gives us an earnings per share of 9.67. That's perfect. Now, what we have here, different scenarios of PE ratio. As I told you at the beginning, I'm going to consider from 35 to 50. Now, bear in mind, Google, Apple, Microsoft, all of them are below or around 35. So here I'm considering very high PE ratios, up until 50, obviously. This is a very personal assumption. One can say, you know what, for me is 100, like Amazon, 119, perfect. Just put 119 here and see what is the fair price for you. I think that those 4 P ratios here, it's a range which can be reasonable for a high growth stock like Tesla. Very innovative, very disruptive. That can make sense. And what we have is, first of all, you multiply this by the P ratio, and you get the price of the stock in 2024 for each P ratio. Then you take this and you discount back at today. So 4 years, 0.3 months, okay? Because now we are in September. At a 9% discount rate. And this is what you get today. 1.9 million vehicles by 2024. You get that these are the fair prices. With a 35% PE ratio, we get 233.13. With a 40, 266.43, 45 around $300, and 50 PE ratio 333. And that's it. Now, another scenario, which is, let's say they're gonna hit 2 million vehicles. Okay, so I increased this by 100,000 vehicles. And the things are all the same, so I'm gonna just go fast. And we can see the same gross margin. The gross profit is obviously higher because this time is 96 billion instead of 91.2 as it was before. And what we get, a gross profit 25.44 billion, then the same 14% in expenses. That gives us a minus 13.44 billions, and which we have 12 billion as operating income. Again, the same taxes, 21%, we get a net income at the end of $9.48 billion for Tesla in 2024. Divided by the total amount of shares outstanding, we get an earnings per share of 10.17 this time. The P/E ratios are the same, they range from 35 to 50. Those are the prices in 2024, and then again discounted back 9%, and we get the prices today. So for 35, $245.40, 40 P ratio, 280.45, 45 P ratio, 315.51, and 50 P ratio, 350.56. Okay. Now we take an average of these 4 plus this 4 divided by 8, and we get that the average fair price today is $290.53 per share for Tesla with this P/E ratio valuation. Considering that the today's price is around 385, let's put here, we get that right now the Tesla is trading at a 32.52% in premium. Now, obviously, these kind of stocks are always trading at a premium. The same was for Apple, the same was for Amazon. Now, the question is, how much of this premium is reasonable for you? Okay, because at the all-time high, $502, that 1 week ago when it was, the premium, considering this analysis, was almost 73%. Okay, so near to 2x the fair price. And when that happens, the stock is clearly overvalued. And when you see these kind of huge drops over there, it's natural that the stock is overvalued. Okay, I'm not telling you that. The market is telling you that, because look at this. This is huge, and you don't have here. You don't have a 2008 financial crisis or a pandemic going on again to explain this. This is just volatility because of speculations. Okay, because of this lag over there. Now, in my opinion, a reasonable price, a fair price for Tesla is around here, this area over there, which can be considered like this, where the prices basically have stayed, and it is a support as well in terms of technical analysis. So from $270 to $300 per share, it makes sense for Tesla. I don't know if it's ever gonna go back. I don't know if it's ever gonna go even below it. It would be great to buy a lot more. Anyway, this is, in my opinion, the fair price for it. Then if you buy here because of, I don't know, fear of missing out or something like that, it's perfectly fine if you believe in the long term, okay? Because of course the price is gonna be higher than this in a 10 years time. If you believe in Tesla long term, yes. But you are missing out what it's called the cost opportunity, because you go down and then you don't know how long will it take to go back here. It could be tomorrow or it could be in 2 years time. So this is why, in my opinion, it's always important to have an idea of a fair price of a company before to buy it. So I hope you find this video interesting, and leave me a like and leave me a comment below. Tell me, for you, what is your fair price of Tesla? Subscribe to the channel, and as always guys, have a wonderful day.